Hey, welcome. It's been a long time, guys. I know people haven't seen me. As you can tell, I haven't been to a salon or a haircut stylist, and we were rooting for the Cubs. We're rooting for baseball season. We're rooting back for things to get back. And that's what the market's done in the upside. Just so that you know, let me check something else here real quick. All right. Back to my other desk. All right. So, those were shorts, not underwear. Take it easy now. Wait a minute here. Oh, my Lord. All right. Our weekly advisory service, we haven't really had a chance to update you guys. We've been very, very active in the live trading room. J-Person Asset Management kicked butt in the first quarter, doing pretty well right now. If you could just go scroll through here. Last week, we bought into some UPS. AEP, IBM, and we added another position there. CVX, Dell, Cardinal Health. We canceled Bristol Myers, GE, UTHR. We bought it and we sold it. We're already out of the trade. It did well. Our current positions, we're no longer, we were in a 15-20 debit or bull call spread. And when the market rallied, we sold against it the 135-140 bear call spread. We're out of that trade today. We still have an option strategy for Dell and MGM for all the way out in September. I just felt that that would give us a chance for earning maybe the market recovering into the summertime, because who goes to visit MGM or any property in Las Vegas in the summer? The kids, the swimming pool parties, the DJ parties. And my friends, they make bank on that type of business. They make more than that than they do in the casinos. Some of you may not realize that. So with that stated, we've got a little bit of Walgreen Boots Alliance, not doing great, but again, Chevron, Dell, Cardinal Health, these are the kind of trades we did along the way. In addition to that, we've had trades in the live trading room from, again, taking a position in Chevron, a Fuller, HB Fuller. In fact, I'll bring this is our trade room page that we use Thinkorswim for our trade room page. And a couple things that you'll find interesting here. We bought Fuller at 32.40 last Thursday. I'm already out of the trade. I was going to say trail your stop. That's that orange line in the sand for the trailing stop. Or I said you might as well just get out here, cost average in. You're up 20% of the trade. Done. HB Fuller is the paint company. So 20%, no earnings, up on a paint company based on a positive. Basically, I'll just give you the trade setup that we had, was a positive buy signal last week, a positive buy signal. The daily pivot, the fuchsia, was above the weekly pivot, and we had that as a buy. 32.40 entry, 30.70 stop, and that's what we got rewarded with. And again, paper profits are just that. They ain't profits because it's on paper. As they said in The Wolf of Wall Street, it's Fugazi. Well, we don't like Fugazi. We like the real deal. And again, I'm not really certain that this market is ready to just rip, roar, and explode and continue higher. And so with that said, look at I would just share this with you right now so that you can get a handle on where are we in the marketplace. First and foremost, this is an E-mini S&P. We went through an intra-week resistance right here. We went through a longer-term resistance right there today at the end of the day. And we came to falling pivot resistance, 29.65. Volume action on a 60-minute futures trend. You know, I'm not a big fan of rising price on weakening volume. I'm more importantly not a fan of rising prices, weakening trend, and higher ATR. That's just not really a great sign for long-term steady trending conditions in the marketplace. So my personal analysis, and we'll now bring you into speed with our trade station. While the advanced decline ripped on IWM, we got a couple things here that I generally don't do, which is one, use Fibonacci analysis. So in fact, it's not even centered correctly. It should be there to there. There we go. From peak to trough, we're now getting near this 618 retrace in Fibonacci. However, if you notice that gold line is just simply a pivot person's pivot resistance target. So while we could see, this is my proprietary volume, and this is the advanced decline, and this is OBV. Now, it doesn't suggest that it's a short yet, but anywhere between that line in the sand and that line in the sand and filling in this gap, I'll tell you what, if we do not see continued strength and continued breadth and everything jiving, baby, this would be that's going to be a tough resistance spot to get through in the Russell. So I wouldn't be chasing Russell here. Russell's up because of the weight of energy and the weight of the regional banks, which took off. All right, let's look at the big bad boy we trade, S&P. So you can be a purist of technicians and drag your Fibonacci ratios from the peak to the trough, or do it the way I've been taught years ago by a master. Some of you guys might remember my good friend Larry Pesavento. Take the average area. So Larry and I have, if you don't know who Larry is, Google him. And Larry Pesavento, he's really the grandfather of Fibonacci. And so anyone that's derived any of his work come from Larry. A lot of people, by the way, you'd be shocked. So the long and the short of it is, if you take the average, because I think that was just a false look. That was a false breakdown in the futures, and the next day it gapped up, and this is the spike, excuse me. The point being is, we had kind of like I would have to say, the shake and then the bake. But the average of the lows is about right here. So if you take the high to the average of the lows, and you'll notice we are right at the 618 retrace. And we're more importantly at a person's pivot resistance, that gold line in the sand. Let me tell you something. I rely more on my pivots than I do the Fibonacci, but I know a lot of institutional guys and a lot of people out there use Fibonacci. So if you know what they're looking at, and they may be less likely to buy the market at a 618 retrace overall in the market, I want to pay closer attention to the condition of this rally. So this is a proprietary volume indicator. The market's rallied, but the momentum of the volume change is going down. On balance volume didn't kick into gear, and the advanced decline did uptick, but baby, we need a little bit more leadership out of that advanced decline. We had a positive day, 396 in the S&Ps versus 100 stocks declined today. All right, so the breadth is a little strong, but it's not as strong as it has been. And so my point being is we're starting, at least there's a little bit of resistance up here. We've got earnings out tomorrow, which will include Twitter in the morning before the open, McDonald's, Mickey D. But in the afternoon, let's face it, it's all about Amgen, Apple, and Amazon, right? MGM reports tomorrow after the bell. And then on Friday, we've got what? Chevron, Exxon, Honeywell, and I don't know, Weyerhaeuser's not going to be a big thing. But tonight, after the bell, we had good reporting from, well, eBay beat, but it didn't do great. But it was the real news was all about Facebook, Microsoft, Qualcomm, and Tesla. Those guys, those four guys, are helping the Qs out and the S&Ps in the after hours. I just think any further upside into that pivot resistance, that gold line right there. I mean, quite frankly, is this economy back to where running right now currently? Is the economy running right now back to where the market was at around late November when people thought the market was overbought there? I mean, we were in a booming economy here, and now price is there, and we are here, and we're in the same price. Are we in the same economic condition now, or has the market maybe it got a little over-accelerated to the downside and it recovered a little too much to the upside? And my bet is we recovered a little too much to the upside. So I'm taking a lot of money off the table on this rally. All right, next, let's take a look at a couple items. This is our algo room. Now, we have a model here. It's SPXL, a daily chart. It is long. It's up a little money. But what I want to get into is some of the other strategies, which I really find tomorrow we'll more than likely want to watch for the VXX. While the stock market rallied today, the VXX went up while stocks went up. Now, the volatility does not generally go up when stocks go up, but it also went up on very strong uptrending volume on a 60-minute relative basis. Our models were short, we were short, and they're flat. So I'll tell you what, if these strategies were short and they're flat, that puts a big old question mark on the market itself. So for that, we also had a SPY strategy. It was long, it's flat. So I'm not sure about this big guy, but at this point in time, I'd have to tell you, our algo strategies are showing some mixed signals on the overall indexes, the S&Ps. That tells me an end of the month rally, maybe Friday, which is the beginning of the month. So on a monthly chart, it may look like there's a lot of strength. Coming into May, the first week of May, we may see that pause, and that might be a spot that you take more money off the table of any stocks that you have long, or start maybe looking at credit call spreads for it, if not a correction back down, a pause from this advance until we get further evidence that all systems are go in our economy. And the last thing that I want to do is start looking at buying some of these vacation destination stocks like your Six Flags Great America or Royal Caribbean or your Carnival or Marriott Vacations. While they may be okay, I think they had a little too much. And MGM, as I just pointed out, I think this little rally right now was a relief rally, and it was easy money. And in going forward, it's going to be a little bit harder to make money in that, meaning the gains will be nitpicking, right? A little bit. Yesterday and this entire week was really some fun, easy money. 20% on a paint company in 3-4 trading days is like ridiculous without earnings, by the way, without earnings. And so what I wanted to point out to you, the Raise Your Focus model, this is a workspace that we conducted a class in January for those that bought the Algo 17, and everyone got this file. And ironically, this is an S&P, this is a daily. It only goes long because the stock's long term. This is for people, I said, listen, if you want a daily system only, long only. It is long, but it's got a very tight stop. And the stop is now underneath yesterday's low, by the way, or today's low. The 60-minute long only has a good performance. It's out. The short model is not short. And this is a long and a short. So we have daily long only, long 60-minute swing trade, short only swing trade, and a long and short. Performance difference, let's take a gander. This goes back since 2015, skyrocketed. All right, so this is since January of 2015. So the performance is pretty good. So we use this as it's a reliable indicator that tells you where to get in. And for the record, it shows the entry. The red line initially would be the initial stop. When the market gets near an intended profit target, trailing functions kick in. That's what those little lines in the sand are, these little gray lines. And then an orange line is an emergency stop, just in case it crashes. If it doesn't get stopped out and it has an emergency, it's got an emergency stop built in. That's what all those color codes mean. So the performance, again, on that strategy, pretty parabolic, which is scary. Now, let's take a look at the long and the long only. And its performance a little smoother and also parabolic, but not as profitable. So the moral of the story is that at this point in time, I'm starting to see some mixed signals on algos that I trust that have good backtest performance. That's the key word. And we've been trading. And these things I've been sharing with you in videos from month to month. They haven't changed the setting. So for going forward, my 2 cents is we're getting near. We're a little frothy in the market. We're going to look for some signs that the condition of the price is too much. I'm not saying to be looking at SDS today, but I would be saying SDS in the next week or so, and we'll try to give you an update. Thanks for listening. Sorry this went over, but I thought you'd be intrigued and would love to look at what these the algos are doing, how we're trading it in the room, and how we're doing over here at Person's Planet. So thank you all very much. And again, if I have the opportunity, what I'm going to do, touch my face, sorry. I'm in my own house. What I'm going to do, I mean, doesn't your beard itch? I mean, you don't shave every day. It's, you know, wash hands quick. Wait. Gel up. I touched myself. All right, hold on. I don't want to make a joke out of it. Gel up. Here it is. All right. So it's the COVID-19 plan. So I'll see you guys on the flip side, and I'll try to do an update when I get the monthly scans done, and we'll see how many stocks are giving good buy signals and good setups for the month ahead, and how many are possibly in an overbought condition. And I look forward to having that posted. We'll try to get that for you this weekend. Thanks, everybody. And it's good to be back on YouTube, and I hope you guys are doing well. Seriously, thank you.